Hello traders, good afternoon. My name is Tomasz Wiśniewski. I'm a Chief Analyst in Alpari Research and Analysis, and this is Daily Analytical Report. A very important day for American dollar, actually one of the last two important days this year as far as I'm concerned. When we look at the calendar, today is FOMC rate decision statement and economic projections, and tomorrow we'll have other central banks deciding about their interest rates, so also very important event. And after that, the market should get quiet, less volatile, apart probably from cryptocurrencies. That will be the hottest topic until, well, I don't know, it will be a very hot topic for the next few weeks, months, or even years. So I don't think they should care that we have Christmas. Let's start with the calendar. On the calendar, you can see that before FOMC, we will have CPI from US. So also ultra important data. We are expecting a rise. Last yearly CPI on a yearly basis was 2%. Now we are expecting 2.2, and on a monthly basis we expect 0.4. Last one was 0.1, and that will be like a warm-up before FOMC rate decision and economic projections. After that, press conference, last one from Janet Yellen. So definitely very interesting day today, very interesting day tomorrow. What is happening on the markets? Well, we had a Democrat winning in Alabama, which was kind of a surprise because that's more of a Republican state. So that complicates a little bit the situation for Republicans. But as for now, markets does not look that the markets care about that. It's all about Bitcoin currently. It's all about Bitcoin. Why? Well, we do have small movements on Bitcoin, but we do have large movements on, for example, Litecoin. Litecoin doubled its value in one day. It is said that traders are moving from Bitcoin. They are cashing profits from Bitcoin, and they are moving to other cryptocurrencies, especially that we have rumors that CME, CBOE are thinking about futures for Ether and for Litecoin, so for the other cryptocurrencies, along with Bitcoin Cash. These are four most popular cryptocurrencies and also the biggest in terms of the market volume. That helps cryptos to climb higher. Huge demand from the Asian traders is also a reason why cryptos are now going higher. So that's the situation from the fundamental point of view. It's all about the last FOMC meeting from Janet Yellen and last interest rate rise this year, because it's almost certain. But we also want to see the economic projections. And as a warm-up, as we said, CPIs, but also industrial production from Eurozone, which should be important for the euro, not for euro dollar obviously, because euro dollar traders are waiting for the FOMC later today in 10 hours. Let's see the charts. Then we will start with Australian dollar to American dollar, which is having a test of the midterm downtrend line again, and is having a test of the long-term uptrend line, this purple lower line. So the price broke this line, came back above, and now we have a test of the midterm downtrend line. Test so far, well, is it good for sellers? Well, so far not so much. The bounce is not so strong. I'm gonna delete this line and let's do like that. The bounce is not strong, but the thing is that as long as we stay below the black area, the black line and the lower blue line, the sentiment here is negative. That's a negative sentiment on this instrument, so a positive for American dollar, and actually that's what we see today ahead of the FOMC. American dollar is a bit stronger, so it's coming back to the recent trend. To wrap the situation up on this instrument, as long as we stay below the black area, the sentiment is negative. Australian dollar to Canadian dollar is having a reversal, but here we are also below important resistances. So this blue line on a weekly chart, that's a long-term uptrend line. Okay, so a strong support in this way. Well, now it's a resistance, and also we do have this horizontal resistance here marked with blue color. So as long as we stay above blue horizontal resistance and blue, dark blue, maybe let's say dark blue uptrend line, the sentiment is negative. Gold retraced 50% Fibonacci, and that actually seems like the first stop for gold, as yesterday the price drew a bullish candle. But for me, it's not the stop of the down swing. For me, the target for the gold should be here, $1,214 per ounce. That's for me the target for the gold, and we should see the price there. Maybe not soon, maybe first we'll see a bounce here and a test of $1,266 per ounce as a resistance, because we didn't manage to test it. Well, we did in a short term, and I even traded that, but in the longer term we didn't test this area as a closest resistance. So that's still open. The thing is that we will do something like that, most probably, or something like that. That's what technical analysis is suggesting us. Obviously, price of the gold will be strongly affected today by the non-farm payrolls. So expect a higher, bigger movements today in those 10 hours when we will find out about, well, rate decision is certain, as we said. The rate rise is certain, as we said. It's all about the economic projections and statement, if we will see any surprises. Next one, dollar index. Dollar index bounced from the horizontal support here, but that was, at the beginning of December. Broke the upper line of the flag, broke the horizontal resistance here, and that triggered us a nice buy signal. And now we stopped on the first horizontal resistance, which you can see this orange area, pretty important. So there was a buy signal was here, and there's a positive sentiment, but there's no more buy signal here, because, well, I'm not the biggest fan of opening long positions below important resistances, and that's actually what we are having right now. We are having this kind of a situation that the price is below a resistance. This price is below the resistance, and everything can happen, right? Buy signal will be renewed once we'll have a breakout of this resistance. Australian dollar to Japanese yen, as long as we stay below the yellow area, the sentiment is still negative, but I wouldn't bet a lot of money on that because the buying pressure is rising. So that's not the best setup in the world. It's not even promising. So don't waste your money on that. Why am I showing that? Well, because I keep track of most of the instruments. We had a nice sell signal here, so I want to see how the situation will develop here. But I'm not forcing myself, right? There was a sell signal here, it was good, it worked. We had a nice drop. but I'm not gonna force the price to climb lower if the price does not want to, but I will keep my eye on this situation because it was nice a few days ago, so it may be renewed. Oil plays a game of ascending triangle pattern, so a higher inclined support and a horizontal resistance. That is a positive formation, but at the same time there is a possibility of this head and shoulder formation. So the left shoulder, head, and the right shoulder. So there is a possibility that the price will break this horizontal support here and this upper line of the channel up formation. So that's how the situation looks like. In case of a breakout of the upper black line, the closest support will be here, 55.10. And that will be really the neckline here of this formation, because, well, we will have two necklines here, like this one, and both of them will be important. So for the proper sell signal, I would wait for the breakout of 55.10. Euro to Japanese yen, false breakout isn't a game. False breakout. Actually, on Euro to British pound, we also have a similar situation. So those two pairs are having a false breakout, false bearish breakout in the tight range, in the sideways trend. So it's ultra interesting. Well, it looks better on Euro to British pound. Here it does not look so interesting, mostly due to the fact that we are in the middle of this sideways trend, and after this false breakout we already tested the long-term horizontal resistance. On Euro to British pound we didn't, but here we did. Cable broke ultra important horizontal support, but is trying to defend it now. That may be a false breakout. If that will be a false breakout, I will be one of first to enter here with a long position. But we'll see. We'll see, because now I'm based in Asia, so decision will be in 10 hours, so in the middle of the night. So I will see if I will be in front of the screens. But well, I can tell you now that if the price will go somewhere here, that will be a false breakout, and that will be a positive sign. That will be a sign to buy. American dollar to Singaporean dollar, that's a strong sell situation here. Well, not strong, but there is a sell situation here. So look, American dollar to Singaporean dollar is going very technically. It's going down very technically, so the price is making lower lows and lower highs. There was the support, broken support became resistance. Here, broken support became resistance. Broken support becomes resistance once, twice. In theory, a double bounce from the resistance should be a strong sell signal, and that's what I'm looking at here in this situation. I think that we should get a sell signal on this instrument. And New Zealand dollar to American dollar, that's one of the best setups right now on the markets. Why? Here we also have this false breakout situation, but also what we have is inverse head and shoulder formation, especially when the shoulders bounce from the long-term horizontal support here, and actually from yearly lows. And also we do have the symmetric triangle with a false breakout here from the triangle. As for the inverse head and shoulder, there is no false breakout. As for the symmetric triangle, there is false breakout here. The price breaks the upper line of the triangle and makes new midterm highs. We're on the highest levels since the beginning of November. So breakout of this line triggers as a buy signal. The potential target is here on 0.7050. To that area we do have 100 pips, which makes it a decent buying opportunity. And here is this euro to British pound situation. So look, the price broke long-term horizontal support here on 0.87875. The price broke that, but that was a false breakout, so the situation is similar to this one on euro to Japanese yen, as you can see here, right? It's kind of similar. But this happened recently. This happened at the end of November. So here, false breakout, price goes back again, and in my opinion, we should eventually see the price here or on 0.9, which as for now gives us 200 pips trading opportunity, which for this pair is quite a lot. That's quite an interesting and significant trading opportunity. Let's go further to the euro dollar, and on euro dollar, ahead of the Fed, the price is on the horizontal support. Look at that, that was an interesting play. From the hammer to the support, on the support we had a shooting star on the resistance. So from the buy signal to the sell signal in one day, sell signal won, sell signal won, yes. Is that a false breakout? Not really. We have to take this into the consideration. So as for now, as long as we are above the orange area, there is no sell signal, but there is a negative sentiment because the resistance was stronger than the support. That's one thing, and another thing is that the price is going deeper and deeper, right? First they stopped here, now they went a little bit deeper. They have problem with the bounce here, so there is a chance of a further downswing. American dollar to Canadian dollar. See, this is also this similar situation as for euro to Japanese yen, because what we euro to Japanese yen and euro to British pound, because we had this tight range, we had this sideways trend, and the price broke that. That was a false breakout, and then a movement, and then an upswing. So you shouldn't be surprised that after this, the price went to the resistance, 200 pips, okay? After this, the price went to the resistance, 260 pips. You cannot be surprised that after this, I'm also seeing movement here of 200 pips, right? I hope I explained that. Those are three similar setups. So keep your eye on those kind of setups because they work. So far, as for now, we do not have anything interesting on this instrument, unfortunately. Canadian dollar to Swiss franc. Also, I thought that this horizontal support will be a bit stronger, but it's not. We are still in the flag. There's nothing for the trend followers, and I'm the trend follower, so unfortunately I cannot tell you anything interesting. Now let me tell you something about S&P 500, correction, reversal, and now we're ready for new all-time highs. That was fast, but let me tell you a little bit more about DAX, because DAX defended this orange support recently, right? You can see that it's very important. Here resistance, after the break of support. And also we broke the midterm downtrend line here. Here the price broke the resistance. The price went to the horizontal resistance here. In the meantime, in the smaller time frame, as you can see here, yellow, the price broke 13,080 and used that as a support. And that's also a short-term, let's call it short-term, I'm sorry, this line, short-term flag formation. So on DAX, everything looks bullish. We should see, well, everything will look bullish once the price will get there. Because now we're on the horizontal resistance, but everything looks good. And there are big chances that we'll get there. And we will have a nice upswing. FTSE is playing this ascending triangle pattern which we were talking about. It is happening, so they bounce from the lower line of the ascending triangle pattern. The buy signal is on. The closest horizontal resistance is here, 7,000, slightly below 7,600. 600 points. I think we can move this a little bit higher, yes. So buy signal on FTSE. Buy signal actually on all indexes. And when speaking about indexes, we have to mention American dollar to Japanese yen, because the correlation between that instrument and indexes is quite high. And here the price broke midterm downtrend line, broke the horizontal resistance here on 113.1. Later used that as a support, once, used that as a support twice, and that is a very strong buy signal. Pity that in 10 hours we do have FOMC. If we didn't have any major tier 1 data for the American dollar, it would be much easier. That would be such a good setup. But now you have to be aware that during FOMC everything can happen. So we may have a dollar carnage, and even the best technical setup won't help when we will have a major fundamental reversal from the American dollar. So yes, it looks good, it looks promising, but watch out for the Fed. Unfortunately, for the traders who have a very tight risk control, that's not the best setup, but it's promising. Euro to Swiss franc, look at that. Euro to Swiss franc in the long term was in a wedge, but that's a rising wedge. That's not the wedge kind of a trend correction pattern, but that's a trend reversal pattern. And also I would like to tell you about the difference. Look, bounce, sharp, sharp bounce, sharp bounce, sharp bounce, and here the price was on those two supports, long term and short, mid-term and long term, and did not perform any sharp reversal, which actually increased the chances for a breakout. But as I was talking on a trading sniper video, that wasn't a situation with a market execution, right? What I would prefer is to wait for the price to get to the blue line. So a pending order here, because the price was still above the support. When the price is still above the support, you cannot go short, because always price can defend the support. So what you should do when the price is always be above the support, but you have a chances for a breakout, you wait for the breakout. Here, as the idea from the trading sniper is now delayed, because the price is bouncing from that support. So we should not see the breakout here, but I still will be looking at this situation and waiting for the situation to develop. And American dollar to Swiss franc is trying to defend this Fibonacci 23.6. Actually, they try to do that with a nice inverse head and shoulder formation or a triple bottom formation. The price getting here should be a buy signal. But as for now, we wait. Fast traders, those who will be in front of the monitors during FOMC, can think about opening long position once we will break the neckline. And Bitcoin, the volatility on Bitcoin decreased a little bit after futures were introduced. Volatility moved to other cryptocurrencies. That's interesting. What's going on. Here maybe our precious Bitcoin will use a correction right now, and as we said, those traders will move to other cryptocurrencies, so they will take profits from Bitcoin and move to other cryptocurrencies. We will see. Okay, now thanks very much for watching Daily Analytical Report. More trading occasions will be on our website and our Twitter account. Now a short break, and after that a webinar about MetaTrader 4. So all traders are welcomed. Thanks very much and goodbye.